Hi everyone, this is Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is the week ending 12/6 of 2020, and this happened on the 1st, which was a Tuesday. The stock was ZM, as in Zoom. It was based on a bearish Tier 2 gap with an entry on a 2-minute DTS sell setup B the tail. The management was simple and the reward to risk about 2.5 to 1. I also have a couple educational comments that I'll be relaying throughout this explanation. First of all, as always, the free stuff for DTS members this week. If you're seeing this and you're not a DTS member, hop on over to the DTS homepage. You can become a member. It's free. You don't even need your name. Just sign up and you will get educational content. For those of you who are members, you will get your invites automatically for this Wednesday, December 9th. It's going to be Trading Stats and Analysis is the DTS educational event. If it sounds familiar, that's because this was scheduled for last week and had to be postponed to this week due to some technical issues at DTS. Here's a daily chart for Zoom, and we're going to gap down to right about there. And we fell the entire day, basically starting right at the open. I rated this a Tier 2 gap. It's a little bit generous, and the reason that I was a little bit generous was because observing the market, even though we've been in a moderately bullish environment, it consists of stocks that really fly higher and stocks that get punished for not performing. Gap downs, if they're reasonable gap downs, have been a place to be, a very fertile place to make money. So I'm a little generous with looking at gap downs. And this one was a decent gap down. Even without the gap, that daily chart was set right to be sold anyhow. So I was very aggressive with this. I wish I was more aggressive with the entry because I did not get in at the open. It ended up gapping more than I planned on, and it moved fairly quickly, and it wasn't something I would do at the open, but it was a close call. I want to take a side note here and just comment about what I just said about observing gap downs and where to be. I get very frustrated when I hear people who are supposed to be knowing what they're doing or helping people making comments to the effect that you need to learn new strategies for a new environment, or learn new strategies for COVID, or learn new strategies for 2020, or however they phrase it. It's a bunch of garbage. There is no such thing as learning new strategies. Now, yes, if you learned a cookie cutter strategy that's a one-trick pony, you may have to relearn strategies every couple of weeks, but you haven't really learned technical analysis. When you learn the language of charts, you don't need to relearn anything ever because you're reading a chart. Whatever it has to tell you, it's there on the chart. Any environment, any time. This is something you adjust to every trading day, every trading week, whatever it is. The 15-minute chart of ZM, we gap down to right there. And you can see we fell hard initially, came back. I got my entry right on that rally coming back. I'll show you a little better here on the 5-minute chart. We gapped down to right there, and then the entry came on that little comeback rally. Entry under 423, stop over 427. Trades underway. It rallied just a little bit more after the entry. By the way, as you look at some of these entries and targets I take and stops, I know a lot of you, I get comments, just don't understand what I'm doing, kind of. And that may be the case. You have to kind of follow what I do. It's a little different than you probably have seen or were ever taught. I want you to remember that I don't know what the exact number is or where it comes from, but certainly most people coming to the market to try to make money fail. So you have to remember that you need to be different. If you're going to do like everyone else does, you're going to be part of the crowd. So you need to be outside the box a little bit. And a lot of the things that I do are considered by outsiders to be kind of strange, not understood. Once I explain them to you, they're very understandable, but they are a little different. It's about making money, not just about trying to pretend you know where a chart's going. 5-minute chart, then fell to right there. I took a first target there. It was not really a cheap target. It was almost 1.5 R, which is decent for a first target. But the reason I wanted to grab it there was because the amount we ended up dropping here was more than I was comfortable with. And oftentimes you end up going sideways for the day, and I wanted to get something off the table there. So that target there, number one, and then target two, I think was an excellent target. Whenever you drop like that during lunch, and I announced this to the room, a little precipitous drop after falling all day, that usually sets the low. It did set the low for the next hour, but then we dropped. Best management on this one would have been to walk away for the day. It would have been a mega home run. It was a great trade as it was. That second target was about 3.5 to 1, but would have been even better just leaving it alone as it turns out. You can do that sometimes. You take your choice. Sometimes you get the home run. Sometimes you give back some of your profits. 1-minute chart gave me a little better view of that entry. I got in right in there. It popped a little bit higher one time, but then fell nicely to target 1. And then, of course, target 2 is off the chart. For those of you who like this trading style, come join us in the DTS trading room. hop on over to the DTS homepage and you can find out how to sign up for the trading room if you'd like to. Always feel free to email me with any questions that you have. In the meantime, this is Paul for DTS. Good trading, everybody.